You're not optimistic enough, ladies and gentlemen. I really mean it. Right now, there is a flood of money into crypto that has never been seen before in the world of finance. The most powerful states in the world, the biggest tech companies, and the institutions that quietly shape every market cycle have all promised to spend trillions of dollars. It's no longer a small project. The race to control the future of money is on around the world. People who know what's going on are setting themselves up to get so rich that the last bull run will look like a small dime. This is not advice about money. First, let's look at what's going on in the world. The US and UK are about to make an official announcement about a new deal to work together on crypto. No one knows the specifics yet, but everything points to one thing: steady coins. What does that matter? Because each dollar that goes into a stablecoin backed by the US is linked to a US government bond. That means there will be more demand for government debt, the US dollar will be stronger around the world, and the government will have a lot more cash to spend on deficits. But here's the catch. People can make deals faster, cheaper, and with a lot more options if a lot of banks start using stablecoins. That's good news for everyone: governments, banks, and regular people. Now pay attention to this part. Countries will not stand by while this plan works once they see it in action. BRICS and other groups will release their own stablecoins, and Europe, the UK, and other places will push harder for tokens backed by the dollar. It's like a chain reaction, and each one adds to the flow of money that will eventually reach crypto markets. Gold is the highest it has ever been. Stocks are going through the roof. There is more money than ever going into established markets. Even so, the crypto markets are only taking in a small amount of this money. At the moment, XRP is worth about 0.0305 dollars. One BNB coin is now worth 950. Bitcoin and Ethereum are leveling off near important levels for breakouts. You can see the pattern here. Capital moves around. It goes in cycles from gold to stocks to crypto. We've seen this before. And every time, the move into crypto sends huge amounts of new money through the market. That's where we are now. It was quiet before the busiest Bitcoin season we've ever seen. The government isn't the only one. Take a look at the tech stars. Together with Coinbase, Google is about to add crypto payments to its new payment system that is powered by AI. This isn't an experiment with a small group of users. This is Google, the company that makes Android, Google Pay, and the billions of transfers that happen every day around the world. After this goes live and they see that people are using the crypto payment choice, you can be sure that it will be added to Google Pay itself. In other words, crypto activities are now a part of the daily lives of billions of people around the world. Think about how much water can flow through that. It would be possible to easily exchange hundreds of billions of dollars. Think about what this means for adoption now. Anyone with an Android phone, Google Wallet, or a business that uses Google's financial services can now potentially use cryptocurrency. That's not just positive. It changes the way value moves around the world in a big way. Also, remember that Google also gains. So, they make money from transaction fees, keep people in their ecosystem longer, and attract customers who grew up with technology. If the first test works, it will only get bigger. At the same time, the institutional players aren't just watching. U.S. lawmakers are meeting with Michael Saylor and other crypto execs to move the strategic Bitcoin reserve bill forward. Take that in. The government of the United States is seriously thinking about adding Bitcoin to its funds. It won't be a small group if they move forward. Even if the government sent billions of dollars, it would set off a chain reaction in crypto. The value of Bitcoin would go through the roof, and that money would eventually flow into Ethereum, XRP, Solana, BNB, and the other cryptocurrencies in the ecosystem. This is already known by the whales. They're watching the same news that we are. They have to do the math because they know that if the US starts buying Bitcoin every month in huge amounts, it doesn't matter if they pay more than they did a year ago. It has to do with the store. It has to do with planning. For small investors like us, that's one of the best signs we've ever seen. The size is huge and the tide is changing. It's also important to note that the Federal Reserve is another force that is moving all of this forward. In the U.S., banks have unrealized losses on their securities investments that add up to almost $400 billion right now. In order to give you an idea, that's 6 times higher than the worst of the 2008 financial crisis. For the 13th quarter in a row, the company has lost money. The FDIC now has 59 banks on its list of troubled banks. It's not a guess. These are real numbers. That means one thing. The Fed has to do something. Rates could fall even more quickly if the Federal Reserve doesn't act. This could be the worst financial accident we've ever seen. Not even close to what we saw in 2008 would be enough to save the banks. That's why rates are going to go down. They can't do anything else. And when rates go down, a lot of money flows into the system. Stocks and gold both go up. And crypto goes through the roof. That's why a lot of the big players are setting up shop now instead of later. They are aware of what is going to happen. People are losing fast faith in CPI inflation figures while the Fed takes a long time to act. People are sick of making changes all the time. They're sick of numbers being messed with. They are looking for different ways to store and trade value. That's exactly what crypto does. That's why adoption speeds up whenever the Fed loses its authority, and this looks like it will be the worst time for the Fed's confidence in its history. Come back to XRP now. After going down to around 0.295, XRP is now up to about 0.305. Right then and there, my Crusader signal icon flashed a buy, and everyone who took that entry has already made a lot of money. If you used 5x leverage from 0.295 to 0.305, your position would already be worth 50% more, a 50% return. When you use 10x leverage, you double your money. That was just one move. The gains are very steady if you follow the signs, hold on to the buy calls, and get out when the sell calls come through. Backtesting on Ethereum, Bitcoin, Solana, and XRP has shown that if you are disciplined, you can almost always win. This is why the warrior signal is being used right now. There is more to it than just telling you when to buy. It gives you the courage to hold on through noise and sell when it's smart to sell. The facts are true, and data is very important in a market like crypto that changes all the time. It's time for me to leave you now before we go into part 2. The way things are set up now is not only bullish, it's also historically good. It's not like anything we've seen before that the government adopts technology, institutions hold stocks, and forces people to act. The amount of money that is about to flow into crypto is unprecedented, and this altcoin season will be known for decades to come. There are governments, tech giants, institutions, and the Federal Reserve all in sync with each other. It's almost like all the puzzle parts are finally fitting together. What's even more important is this. The time frame for all of this is not many years away. We can see it. The dominoes are starting to fall. The cash is already moving around. Building blocks are being put in place for what many people call the biggest transfer of wealth in modern times, and people who see it early enough are setting themselves up for something that could really change their lives. We need to look more closely at the money flows because this is where the truth of the situation becomes very clear. There are trillions of dollars moving back and forth between gold and stocks right now. Investors are worried about the banking sector and the uncertainty around the world, which is why gold just hit an all-time high. It's a record high for stocks because the Fed is letting people know that rate cuts are coming. But let me tell you the truth. These markets are getting close to being full. At this point, gold's growth is limited because it doesn't create yield. The economy is going down, which means that stocks will go up. What's next for that money? Into crypto, the only asset class with both uneven growth and global momentum. This is important because cash doesn't go away. Changes. When buyers lock in gains from stocks or gold, they look for the next chance. Crypto is in a great spot right now because, unlike in the past, the machinery is already in place. This isn't the gambling playground of 2017 where small bets on the stock market could move the whole market. Today, we have regulated futures markets, set up institutional custodians, and got banks building settlement lines that run on the blockchain. That means that a lot more money can flow into Bitcoin, Ethereum, XRP, Solana, and the altcoin market as a whole than it could before. We can see that adoption isn't just happening in schools if we look a little further away. This is coming from states that are preparing for the age of digital assets. It's no longer just a shop meme to say that Bitcoin is like digital gold. At the parliamentary level, this story is being accepted. This is the main reason why bills like the Strategic Bitcoin Hoard are so important. As soon as one country says Bitcoin is one of its reserve assets, it starts a chain reaction around the world. Another country won't want to fall behind. Just think about what would happen if the US put even a small amount of its savings into Bitcoin. If the Treasury only had 1% of its balance sheet in Bitcoin, it could buy hundreds of billions of dollars worth of Bitcoin directly. That doesn't just make Bitcoin go up, it also changes the prices of all the other crypto assets, so capital never stays at the top. When Bitcoin prices go up, money flows to Ethereum, then to large cap alts like XRP and BNB, and finally to mid and small cap projects that make altcoin season go off the charts. Now let's talk about XRP in particular since it plays a very important role in this cycle. XRP is different from most other investments in one way. One clear use case for cross-border payments that banks and other financial firms around the world are already starting to use. Bitcoin could be the strategic reserve asset, and Ethereum could be the payment layer for decentralized finance. XRP, on the other hand, is aiming to be the global bridge currency. This means that when money comes into crypto, XRP doesn't just ride the wave, it makes it stronger because it fixes a real trillion-dollar payment problem. Look at how the prices are moving right now. In a short amount of time, XRP went up from around 0.295 to about 0.305. On the surface, that doesn't sound like much, but in situations where people are being pushed, that's important. Even more importantly, these are the steady stair-step moves that set the stage for bigger breaks. It looks like XRP is getting ready for a much bigger expansion when you look at both technical signs and macro forces. It gets even more interesting after this. Right now, the banking problem is happening all over the world, not just in the US. There is a lot of stress on banks in Europe. Japanese banks are under a lot of pressure to raise their rates. There are debt crises in emerging economies. This all makes the case for payment systems based on blockchain even stronger. Technologies like XRP Ledger are always what banks look for when they want to move money faster, cheaper, and more openly. This isn't just theory. Pilot projects have been seen before. Adoption has already happened in corridors where cash flow is very important. When there is more uncertainty, there is also more reason to increase adoption. Finally, think about how markets work. A lot of small buyers still don't believe. They believe that crypto has already gone up too much or is too risky to touch. In the meantime, tech companies are merging, institutions are quietly buying, and governments are writing laws that let a lot of people do business. That gap is exactly what makes opportunities grow exponentially. Prices will be a lot higher by the time store FOMO sets in. People who see it now, when fear and doubt are still around, will gain the most when the crowd finally shows up. This is what makes the trends so easy to guess. Remember the years 2013, 2017, and 2021. The same plan played out every time. Early users get in before the market gets boring. Institutions and insiders build up. Then the news changes, shoppers rush in, and the last parabolic blow-off happens. This time, the size is different. We are not talking about billions of dollars, but trillions. Adoption based on usefulness is what we're talking about instead of adoption based on speculation. We are not talking about fringe markets, we are talking about world integration. That's why the upturn could be much bigger than in the past. Don't forget that crypto doesn't move straight forward. Change is a part of the process. This is why it's important to have the right point of view. You don't need to freak out when you see pullbacks. There are chances there. During every bull cycle, the biggest gains are not made by following green candles. Instead, they are made by getting in early, being willing to deal with volatility, and riding the trend until the cycle ends. What's going on in technology is also important to think about because it's a big tailwind. AI, Bitcoin, and payment systems are all coming together at the same time. Adding crypto payments to Google is just the beginning. You can be sure that Apple, Amazon, and Microsoft will move quickly to make sure they don't fall behind once it goes live. The snowball effect turns into an explosion at that point. A lot of people will be using the apps they already use every day to do business in crypto without even realizing it. There will be no need for them to set up wallets or learn hard processes. It will be built right into the tools they already trust. That's how mass acceptance works. Delphi is the other piece in this puzzle. DeFi isn't in the news right now, but it's changing in ways that will surprise people when the money comes back. There are already tests going on with tokenized funds, real estate, and goods. When trillions of dollars worth of real-world assets start moving on-chain, the amount of liquidity going through DeFi protocols will be unmatched. Assets like Ethereum, Solana, and XRP, which support this activity, will go through the roof in value. Everything is going on at the same time that the Fed has no choice but to lower rates. It sounds almost magical. In fact, the policies that are meant to save the old system will set off the new system. Rate cuts lead to more cash. You take a risk when you buy or sell goods. And in today's financial world, crypto is the only thing that answers well to liquidity. That's why I think we're on the verge of the biggest event in this decade for making money. Once more, zoom out and think about the change in culture. Digital assets are already more popular with younger groups than physical ones. It's better for them to have Bitcoin than gold. They'd rather send USDC than move money. They'd rather have their money in DeFi earn interest than in a savings account. As wealth moves from older generations to younger generations at a rate that has never been seen before, the desire for digital assets grows. When you add in institutional adoption and government participation, you have the perfect storm. It's easy to see why this is such a special time. Government action, institutional positioning, tech adoption, Fed policy, and culture momentum. There is only one vector that points in one way. It will be liquid soon. Adoption is speeding up. People's faith in old methods is falling apart. And cryptocurrency is there as the way for all of it to get out. That's why I mean it when I say people aren't optimistic enough. Most investors are still not thinking big enough. It makes them think of the last cycle. On the other hand, this cycle's forces are much bigger. The chance is getting exponentially bigger, and the time frame is getting shorter and shorter. That's why we need to pay attention now, not later. And this is where we'll start again. For big moves to come, the flashing signals on the charts, the adoption measures on the blockchain, and the changes in how capital flows are acting are all coming together in a way that makes them possible. These days, if you zoom in on the charts, the signs flash like beacons. The price of Bitcoin is staying in a narrow band. Volatility is getting lower. And in the past, when this pattern has been seen at the same time that macro liquidity has changed, there has been a violent breakout that followed. Ethereum is showing similar signs by making higher lows and steadily going up, and XRP, which is still hovering around the low 30-cent range after its bounce, is almost ready for one of those sudden price increases that leaves latecomers stunned. Here is the main difference between this cycle and others that came before it. This is more than just a guess. In past bull markets, stories moved prices a lot more than facts. It was ICOs in 2017. It was NFTs and joke coins in 2021. People were interested in those stories, but they weren't linked to long-lasting structural change. This is not the same thing we saw before. Deep systemic acceptance keeps this cycle going. Crypto is becoming a part of government strategy. Banks are trying out settling on the blockchain. Tech giants are adding crypto to the ways they handle funds. Institutions are writing up plans for how to divide up Bitcoin funds. This is real adoption, not just empty words. When facts and speculation match up, markets really start to grow quickly. Because of news stories and price changes, speculation speeds up. It stays going because there is real demand, real integration, and real usefulness. That's why this setup works so well. It's both a story about liquidity and a story about usefulness. When two things come together like this, the benefits are huge. Check out signs for liquidity. The quantity of stablecoins is beginning to rise again, which is usually a sign that the crypto market is about to grow. There are fewer coins for sale because exchange stocks are going down. There are more and more whale wallets. On-chain data shows that DeFi, stablecoin transfers, and cross-border settlement amounts are all getting busier. All of these are the kinds of measures that come before big runs. At the same time, the banking problem is getting worse behind the scenes. It will take time for the nearly $400 billion in potential losses to go away. Rate cuts might help, but they won't fix the fundamental problems that are causing them. This instability puts pressure on standard assets and makes alternatives like crypto look better at the same time. The new system shines brighter every time the old one creaks. And for those in the right place, that's the signal, not the noise. Let us talk about altcoin season in more detail, as this is where most people fail to see how big things can get. In the past, when Bitcoin breaks out and hits new cycle highs, sellers begin to pull back their funds. First, Ethereum gets a big chunk of the market. Then, big altcoins like XRP, BNB, and Solana start to run. Once that phase starts, it sets off the smaller cap surges that give the market some of its biggest percentage gains. After a few weeks, coins start to move 10x, 20x, or even 50x. Also, keep in mind that altcoin season is very exciting because people want to make more risky plays when they see Bitcoin double. That's why liquidity changes so quickly and traffic grows so much. Those who got in early on the large caps will benefit the most, but those who time the waves in mid caps and small caps can make gains that totally change their portfolios. That's why altcoin season is so famous, and the signs are already there. But once more, the background is what makes this cycle different. We're not just dealing with a crazy rush of speculation. Adoption is happening at the same time in the real world. It's not just good news when Google adds crypto payments. It could have a number of billions. Having lawmakers push for a Bitcoin reserve bill isn't just a sign of optimism. This strategy could put billions of dollars straight into crypto. It's not just talk when banks try settlement on the XRP ledger. Real money is moving around the world faster, cheaper, and more easily. All of those things power the same rotor. More people buying, more money coming in, costs going up, and more people buying again. This is where discipline comes in. This kind of market rewards people who can see the bigger picture and hold on through the ups and downs. Along the way, there will be moves back, shakeouts, and fixes. But in every previous wave, people who sold out too soon missed out on gains that could have changed their lives. Now more than ever, it's important to keep things in perspective. There will be a lot of noise and exciting news, but the overall direction is already set. We should also talk about how influence and on-chain tools have changed since the last cycle. In 2021, retail sellers took on too much debt without thinking, and there weren't always clear signs. As a result, many of them lost everything in liquidations. This time, traders can time their entries and exits with a lot more accuracy thanks to more advanced tools and signs. You can confidently ride trends with data-backed certainty now more than ever, whether you're using advanced indicators, AI-powered analytics, or just keeping an eye on on-chain whale flows. That's another reason why this cycle will be much bigger than the last one. The infrastructure for traders has grown up at the same time as the infrastructure for banks. Also, there is the culture factor. Every day, more and more people understand that fiat currencies are losing value. Loss of buying power, inflation, and devaluation of currencies are no longer vague ideas. They're everyday things. Crypto, like Bitcoin as a way to keep value or stablecoins as a way to pay for things, gives people a solution they can use. That culture momentum, especially among younger people, makes sure that demand won't just be a trend that goes away. It's genetic, and it's getting worse faster. It's not a question of if crypto is going up. The question is how high and how fast. It looks like we're in front of one of the best asymmetric opportunities of our time, since liquidity, adoption, policy, and culture are all moving in the same way. People who prepare for it and stick to their plan will remember this cycle as the most important event in their lives when it comes to getting rich.